All right. So I am getting this question a lot. This keeps coming up a lot. It's not even really a question, but just on returns that I see from other people bringing us tax returns when they're working with us for the first time. And just being around, being in chat, and people asking questions, we get this a lot. And so, what I want to talk about is S corporations and having wages. Like, Garrett, if I have an S corporation, do I have to have a W 2? Do I have to have wages? And the answer is most likely, in almost every case, yes. I'm on the IRS website. Look, an official website of the U.S. government. The internet's never lied, never been wrong. If we scroll down this website, you see S corporation compensation. This is big. This is going to tell us everything we need to know for the most part. Now you can go look at actual code and stuff like that, but this is going to give we're going to hit the highlights here, and this is going to tell us pretty much everything we need to know. Reasonable compensation. This is a big deal for S corporations. And so if you look here, I've highlighted a couple things. I'm not going to read through all of this, but what I want to do is point out that you do have to have wages, all right? If you have an S corporation and you're going to take distributions, you're going to pull money out of the business, you're going to have some sort of wages if you're a content creator and you are the owner, both the owner and the employee. So let's just look really quick at this. I promise I'm not going to read all of it. I know how annoying this can be for some people. They don't even want to look at this stuff, but I'm going to try and break down the main points here. S corporations must pay reasonable compensation to a shareholder employee in return for services. So that's you doing things for the business, streaming, posting content on YouTube, any other platform, so on and so forth. In return for services that the employee provides to the corporation before highlighted non-wage distributions may be made. So what they're saying is you got to pay yourself wages before you just pull money out in the form of distribution. You got to have wages on the books in order to get distributions. So remember, in an S corporation, you are both an employee of the business and a shareholder. So since you're both, they're telling you here, you got to pay yourself as an employee before you can pay yourself as a shareholder. All right. Skip the second paragraph. These are all very important, but I'm trying to hit the highlights here. The IRS has the authority to reclassify payments made to shareholders from non-wage distributions. So what they're saying here is the IRS, if they don't agree with your reasonable compensation structure, so they don't think you're paying yourself enough wages, they can go in and reclass your distributions. So if you're pulling money out and half of it's wages, half of it's distributions, they can go and reclass that if we can't prove, reasonable compensation. Now, it's very subjective. There are a lot of things that go into it, and down here you can see here there are three major sources: services of shareholder, services of non-shareholder employees, so other employees you may have that do not own the company, and then capital and equipment. We're going to have to make a case as to what your reasonable compensation should be. Now, all this to say, you can probably kind of gather you got to have wages of some sort, okay? And even then, we need to make sure they're reasonable wages. This is very important, and this is what I'm not going to say a lot of accountants get it wrong, but if you're going to go the S corp route, this is something your accountant needs to get right, because you may get audited, you may not. I can't speak to that, especially if I'm not your accountant. I am a CPA, and I can't speak to whether you're going to get audited or not. That's not how we do things. We do things based on the assumption that everybody's going to get audited. We're just going to do it right. And if you're trying to do it right, you need wages. And here, I just want to point out, last thing, there are some court cases here that just go to show, like, authority to reclassify. That's the IRS being able to come in and reclassify distributions to wages. Reinforced employment status of shareholders, basically saying, like, these shareholders are also considered employees. And you notice there's a public accountant in here. That's funny. And then reasonable reimbursement, not too much worried about that. These are all very important things. I don't want to skip over stuff, but also I just want to hit the highlights here. You need to be looking at these things if you have an S corporation. If your accountant set this up for you and you don't have wages, you don't get a W-2, you're not considered an employee, that's going to be a problem. I can't guarantee that it's going to be a problem this year or next year, but if the IRS does come down and audit you, it's not going to be fun. So I wanted to talk through this. I hate that this has even taken this long, but I do want to give all the, hit the main points on this. As you can see, the document's very long. There's a lot that goes into all this. That's why you hire an accountant, right? Because these things are important. And if you're setting up an S corporation because your buddy told you to and you don't do it correctly, you could get absolutely hammered by the IRS for this. So I'm going to cut it there. Hopefully, you learned something from this. If you have any questions about it, obviously just DM me, DM Joseph, just our firm, general Twitter. We're on Discord. You can also go to our website, check us out. Hit us up because it's better to get these things in order now. Once the year ends at 12/31, we won't be able to really fix this stuff. So we need to make sure we get this handled now. And yeah, if you have any questions, come see us.